Banks love lending you money, so much that they do it for free, or do they? In this video, I'll discuss the 3 hidden costs of interest-free deals on credit cards. My first point is that credit cards only require a minimum payment to be made in respect to the balance. Now, while this isn't a direct cost, it does allow you to get yourself in a difficult position. Credit cards which have a promotional period, such as a balance transfer or a purchases deal, allow you to make a minimum payment, which is typically between 1 and 5% of the outstanding balance. This means every month you're allowed to accrue more debt without incurring interest. It sounds great, but don't let this fool you. Only paying the minimum payment won't pay off the full balance of the debt by the time the interest-free deal has ended. It services the debt. You need to make independent arrangements to pay this debt off at the end of the interest-free period, whether that be a balance transfer to another card or making overpayments. If you don't do this, then the balance you have on the card at the end of the interest-free period will begin accruing interest, introducing you to one of the most expensive ways to borrow, a standard credit card interest rate. My second point is about the allocation of payments. So when you pay a credit card, your payments are typically allocated against the balance which charges you the highest interest rate, and then against your promotional balances that end at the soonest point. But there's no law that says that they must do this, and there are some credit card companies that don't take this approach. MBNA, for example, takes a subtly different approach. When they allocate your payments, they do so to the highest eventual rate of interest, with no consideration of promotional balances. This means that if you use MBNA's credit card for 2 promotional rate offers, one for a balance transfer that ends in March and another for a purchase which ends in December, all of your payments will be allocated to the purchases offer rather than the balance transfer offer, which will be charging you interest from March. Happily, MBNA, to my knowledge, are the exception to this rule, but it's worth bearing in mind that this is how some credit card companies work, and when you receive the terms of your credit agreement, it's worthwhile reading through the section which talks through the allocation of payments. My third and final point is the psychological impact of debt. In my view, the biggest problem with debt generally is the mental space it inhabits while you know that every month your bills have been increased by an amount of the repayments you need to make. I know that if I don't have a plan in place for how I'm going to pay my debt, it sits in my mind like this creeping intangible source of stress that never seems to go away. When you have credit card debt, you need to have a plan in place to pay it off if you want to avoid paying interest or fees. But I suspect you already knew that if you're spending your free time watching me talking about credit card promotional periods. If you hold a balance on your credit cards past the end of your promotional period, then you'll start paying the famously high levels of interest implicit in credit cards. If you're relying on a balance transfer offer to be available to you to transfer again, it's entirely possible that there will not be one available due to your existing debt. Relying on this introduces an additional element of risk. Please make sure that you've got a backup to pay the debt off, just in case someone else is not willing to lend to you. Credit cards are a significant tool in your journey to financial health, but if you don't use them correctly, they can cause you serious problems. I implore you to treat them with the respect that they deserve, and if you don't trust yourself to be careful with them, don't use them. Should you want to carry on further down this rabbit hole with me, please find my video which compares secured and unsecured debt here. I'll see you next time you're around.